Sorry, Yvonne, you are muted.
Can you hear me now?
Yes.
Okay, good. Okay, let me go back. Okay, so I was saying before the break, we completed step 1 of the ASK annual review. So now let's continue to step 2. So in step 2, we are supposed to select the GST returns for our review. ABC should be selecting the return that has the higher total supplies and purchase value. So in template 1, it will be highlighted with an orange cell that I will show you later. For companies on monthly filing frequency, you will need to select the return with the highest total and another 2 consecutive returns. So for example, if the highest total is from June, the company can select either one of these combination, April, May, June, May, June, July, or June, July, August, so long as June is selected and the other 2 returns must be consecutive month. And then for those on quarterly or the 6 monthly filing frequency, the return with the highest total is to be selected. So this is a screenshot of the orange cell that I was mentioning in template 1. Again, like I stress again, there are preset formula in template 1, so there is no need for you to manually add up the box 4 and box 5 to determine which period you need to select for the ASK annual review. You just need to check against this orange colored cell and match to see which quarter has a matching value, and that should be the quarter that you will need to select for this review. So for ABC, the highest total is actually for the period ended 30th June 2020. Hence, this should be the period that they need to select to perform this review. And since they are on a quarterly filing cycle, they only need to select one GST return, which is April to June 30th, 2020 to conduct this review. So now we can move on to step 3 of the ASK annual review, which is to perform detailed checks for the particular GST return that has been selected to conduct the review. The checks are required for all the boxes declared in the selected GST return, namely box 1 and 6 for standard rated supplies and output tax, box 2 for zero rated supplies, box 3 exempt supplies, taxable purchases and input tax, and goods imported under MES or other GST schemes. So if it so happens that for the particular return that the company has selected, there is no zero rated supplies, then when you perform this review, you can actually skip the detailed checks for box 2. You just need to do for your standard rated supplies and for taxable purchases and exempt supplies if there is any. So on a broad level, there are 3 basic processes, beginning from reviewing of your listing, selecting samples, and checking of supporting documents for the sample selected. We review GST listings to ensure the listings tally with the respective boxes in your GST return. This is to ensure that no transposition errors occurred when you filed your GST return previously. We also review the GST listing to ensure that the listings are complete. This means that you have captured all your GST transactions from your source documents and included them in the listing that you use to file your GST return. The second process that you need to perform in step 3 is to select samples from your listing to perform a series of checks. For each box of the GST return, you will have to select samples that cover your major business scenarios. This is to ensure that within the sample selected, you would cover a wide range of GST transactions that are representative of your business. You may refer to the guidelines in our ASK Annual Review Guide for more information. The number of samples to select must be based on the criteria indicated in the flowchart, which I will be going through next. This flowchart is actually extracted from our eText guide to show you on how to select samples from your listing. You start off from the first box. If the total number of transactions in your listing is less than 30 transactions, then you will check all of the transactions. If the number of transactions is more than 30, you will need to select 30 transactions from your listing, and these must cover the major categories of your transactions. After selecting 30 samples, you will have to check whether these 30 samples can cover at least 30% of the total value in your listing. If so, you may then proceed to the next step. However, if the 30 samples selected do not cover at least 30% of your listing value, you must select more samples until it covers 30% or up to a maximum of 60 samples. So it's either 30% or up to a maximum of 60 samples, then you will stop there. So even if you have selected 60 and it is still less than 30, it is okay. You will just stop there and then you will do the check on that 60 samples that you have selected. Do note that for standard rated supplies, you will only need to sample a maximum of 40 transactions. The last process is to check your supporting documents for the sample selected. This is to ensure that you have the valid documents to support your GST declarations. As indicated in the table that you see on screen, the checks to perform vary depending on the GST return box that you are checking. So for example, for standard rated supplies and output tax, you will need to check and ensure that GST is charged properly. And for taxable purchases and input tax, you will need to ensure that the GST is claimed properly. There are 7 sub-steps to step 3 of the annual review as shown in these slides. As mentioned previously, we will be going through step 3B, which is to check zero-rated supplies, and step 3D, which is to check the input tax claim. So we will be using ABC Private Limited to illustrate the checks that need to be performed on their zero-rated supplies for the selected return, which is for the period ended 30th June 2020. What you see on screen is a list zero-rated listing of ABC Private Limited. So from the listing, ABC should check whether the listing total tallies to box 2 of their GST return. So whatever they see here, they will match these figures against the GST F5 that they have declared for the same period to make sure that they have declared the figure correctly. To ensure completeness, ABC should also run through the invoice number in this listing to see if there's any missing invoice number. So in ABC's listing, you will notice 2 missing numbers, 12346 and 12347. So ABC should therefore find out whether is it an omission or what happened to these 2 invoices. So I would like to highlight that for some companies that we come across when reviewing this ASK annual review, some companies would actually have only one series of invoice number. They will not split the invoice series into two different series to differentiate between standard rated supplies and zero rated supplies. So in this case, if there is no split, then we may see some gaps in between the invoice number when we review the individual listing, as the invoices may be issued for the other supplies. But if let's say the company actually has two sets of invoice series to differentiate between local supplies and overseas supplies, then we should not expect to see any gaps in between. So if there is any, then it may warrant some investigation. So in this case, because ABC is only using one series invoice number, these two missing invoices that we did not see in this zero rated supply listing were actually issued for standard rated supply. After reviewing the zero rated supply listing, ABC will then need to select the samples to perform the review. So as mentioned, if the listing has more than 30 transactions, they should select at least 30 samples to cover a minimum 30% value or a maximum of up to 60 samples. And the selected sample should cover the different category as shown in the table. For export of goods, ABC must select transactions involving different local and overseas customer, different scenarios of direct export and indirect export, or the different export mode. So back to ABC's zero rated supplies listing, the samples that they select must cover their different customer. In this case, XYZ Limited, BBB Private Limited, and DEF Inc. The credit note which they have issued for their sale. For zero rated supplies of goods that are exported, they should select samples that cover different export scenarios and different modes of export. And since they also provide management services, as mentioned, to their overseas subsidiary XYZ Limited and has zero rated their supply, they should also select invoice 12353 for checking. But in ABC's case, because in their zero rated supplies listing, they have less than 30 transactions, so they are going to select all of them to perform the review. For each of the samples selected, ABC will then have to retrieve the invoice which they have issued for the sale and check for the following: that no GST amount is shown on the invoice or the GST amount is recorded as 0. The total sales amount is recorded correctly in their zero rated supplies listing based on the invoice. From the description of sale that is stated on the invoice, ABC should then determine whether the supply made is on goods and or services before they proceed to perform other relevant checks. Assume that the invoice is issued for zero rated supply of goods. ABC should retrieve the supporting transport document for the export of their goods. Depending on the mode of export, the supporting transport document could be bill of lading for exports via sea, airway bill for exports via air, or export permit for exports via land. So on the transport document, ABC should check whether their business name is shown as the exporter, whether the goods are exported from Singapore to an overseas country, whether there is sufficient information to support that the goods exported are indeed the goods that they sold. For example, the transport document should indicate ABC's invoice number, or the description, the quantity, and the value of goods on the transport document should match with the details on ABC's invoice or other documents like delivery notes or packing lists. So in this case, we are going to assume that ABC could not find any transport document to prove that the goods for invoice number 12344 are exported, as the goods have been delivered to a local person. Hence, ABC might have wrongly zero-rated this sale and would have to standard rate this supply and to account for the output tax to IRAS. ABC also realized that they have been making this error since day one and it affects their GST declaration in the past financial years, which is a recurring error. This slide shows the common broad categories of services that can qualify for zero rating. For invoice 12353, which is a zero-rated supply of management services to XYZ Limited, ABC should retrieve their invoice, their contract, or any correspondences pertaining to this transaction and examine if the management services which they provide can qualify for zero rating as international services. So in this case, we are going to assume that ABC has correctly zero rated their supply of management services to their overseas subsidiary. This is the screenshot and the link to our website showing the common zero rating scenarios. We noted a common error among taxpayers, which is to zero rate services as long as they are billing to overseas parties. So you may wish to verify the nature of your services and check against these international services under Section 21(3) of the GST Act. After performing the checks, record the results in template 3. Okay. Just give me a minute. Let me call out template 3 so that I can do a walkthrough with you.
Sorry, Yvonne, you need to unmute. Oh, okay. Just now I could not hear you. You want to try speaking again?
Okay. Can you hear me?
Okay. Can,
I'm
yes.
showing template 3 on screen, which is the working template for zero-rated supplies. So this is the Excel template that you will see when you download it from our website. Fill in the information accordingly, your business name, your UEN number, the counting period for the GST return that you have selected to perform this review. And then, okay. At step 3B.1, part A, fill in your supply listing value and your GST return. Supply listing means the listing that you have extracted that which has helped you to submit your GST return back then, and the GST F5 value. So by right, we should see a zero difference when we compare these two figures. And then these are some of the questionnaires that you will need to follow to guide you to complete this template. So for part B, run through the invoice numbers in your listing. Is there any missing invoice number not found in the listing, for example? So if you can see here, it says select from drop-down list. Okay, the fields are a bit small. You will need to blow up. It's actually a drop-down list that you can select. Is it very small? Okay, let me blow up slightly. Okay, so these are the few selections that you can select to help you to answer the questionnaire. And then again, over here, we emphasize how to select the sample size to perform your review. After you have selected, then you will need to enter the invoice information at this portion of the Excel spreadsheet. The invoice date, the invoice number, name of customer, description, the invoice amount, destination of goods where you exported it if it is for the export of goods. And these are all the checks that you will need to indicate a yes or a no, and whether did you maintain this documentation. Select the mode of the export and whether the transport documents that you have can help you to prove that your goods are being exported. If the sample that you selected is for provision of services, then you do not need to answer this part of the template, but you will need to answer step 3B.3.2.2, which is on zero-rated supplies of services. Can your service qualify as international services? So it's either a yes or a no. And remarks. You can put in any remarks that you have for these particular samples that you have selected. So if you will need to select 30, you will have to fill in 30 rows of the samples that you have selected. If you are required to select more, then you will need to add in the rows on your own to make sure you document down all the checks for all the samples that you have selected. Okay, this part is where I would want to emphasize when you do this template check. So like I was explaining in our template, there are certain cells that we have inbuilt formulas, for example, like what you see on screen here. So please try not to change the formula. Those cells that are being highlighted are cells that you can actually fill in with what you with your information. So for example, number of samples checked, you will need to fill in here. If you have selected 30, you just put in 30. If you have selected 60, you just put in 60. And all these percentage and the value would be computed. So for example, let's say I have selected here, which is a 20,000 invoice and another 15,000 and then another 3,000. So you will actually see that it is auto-populated. Total amount shown in the listing is what you key in here. So for example, if you have key in your supply listing to be 100,000, that means for the return that you have selected, you have reported 100,000 worth of zero-rated supplies and you have declared 100,000 in your GST return. I should see a 0 here. This 100,000 will auto-populate at this cell here, total amount shown in the listing. The percentage will be auto-computed for you as well. You will need this percentage and this number of sample checks in the later part after you have completed the review to be filled in the declaration form, which I will go through later. Okay, let me go back to my slides. Okay, so we are done with ABC for their zero-rated supplies. Let's move on to the input tax and refunds claim for the selected GST return, which is for the same period, 30th June 2020. Okay, so first thing, same thing, they will need to retrieve their purchase listing for the period under review. From the listing, ABC should check whether the listing total tallies to the GST return. Run through the listing to check whether they have wrongly imported goods with GST suspended or deferred by checking if there is any import permits beginning with ME or MC. In this case, the permit should all begin with IG. Look through the dates of transaction, invoice or import permit recorded in your listing. To make sure that you have not claimed any input tax for transactions not falling within the accounting period of the GST return. This is also to ensure that you did not make any duplicate claims on the same transaction. Ensure that any reduction is made based on either credit note received from your supplier or debit note issued to your supplier. Run through the description to see if there is any nature such as entertainment, phone charges, transport claims, miscellaneous expenses, and to make sure that these are meant for business purposes. Check if you have claimed for any input tax that is not allowable. For example, purchases from non-registered suppliers, purchases where input tax is specifically disallowed, for example, like club subscription fees, medical expenses, medical and accident insurance premium, family benefits, private motor car expenses. Exceptions to medical expenses are relating to the Work Injury Compensation Act, WICA, or collective agreement under Industrial Relation Act. We will allow this claim. And to highlight, with effect 1st October 2021, any expenses relating to COVID-19, if it is incurred pursuant to return law or return advisory issued or posted by the government, these are allowable. After reviewing the purchase listing, ABC would have to select the samples to perform the review. The samples must cover the different category as shown in the table. If ABC has made tourist refund scheme claim or bad debt relief claims or any refund claim for reverse charge, they will have to select samples from each of these categories. So same thing for each of the samples selected, ABC would have to retrieve the invoice which they have received for the purchase and check that the invoice is addressed to ABC and show the amount of GST charge on the purchase. The purchase amount excluding GST and the total GST amount are recorded correctly in your listing based on the source document. As the tax invoice is issued in foreign currency, ABC should claim input tax based on the total GST amount shown in Singapore dollars or by using the exchange rate stated by the supplier on the tax invoice. Some of the errors that we came across when we review taxpayers' input tax claims are for invoices that is issued to them in foreign currency. They actually claim based on their own in-house exchange rate, which is not correct. So they should always claim based on what the supplier has charged them. In this instance, ABC has correctly done so and did not use their own exchange rate to claim input tax on their purchases. Lastly, ABC is supposed to check that the purchase is incurred wholly for its business purposes and is allowable. For import permit and transport documents such as bill of lading and airway bill, ABC should check that the business name is shown on the import permit as the importer. If the import permit shows another person as the importer for the goods belonging to ABC, they should find out why is it so. And if it is a genuine mistake on the importer's name, they must maintain documents such as the supplier's invoices and shipping documents to support that the goods imported belong to them. And very importantly, they should ensure that such incidents should not happen again. Check that the CIF value of the goods declared in the import permit is recorded correctly in the imports listing. They should, for general import case, right, when you claim the input tax, you should be claiming what the custom has actually charged you. So this value can be extracted from the import permit. So similarly, on the transport document, ABC should check that their business name is shown as a consignee for the goods. After performing the checks that I have gone through, ABC should record the results in template 6. Let me share template 6 to do a simple quick walkthrough. Okay, it looks similar to the template 3 that we walked through earlier on, except that this is for the input tax and refund claim. So same thing, you fill in your business name, your UEN number, the accounting period. And then for the first card, you will have to key in your purchase listing value and then your GST return value. And note if there is any differences. For template 6, there are a lot more questionnaires that you will have to answer. So again, it is actually selecting from drop-down list. So for each questionnaire, there should be one drop-down list that you can actually select whether is it a yes or a no, or if it is others, please specify what is your finding under remarks column. Okay, since we are here, I would like to point out one general or one common mistake that we noticed, which is this part of the questionnaire. Have you claimed any input tax incurred on purchases or expenses that is not allowable? So many times when we look at the template submitted by taxpayers, they will indicate no, they did not make any disallowed claim. But when we do further checks or when we request for the listing to perform further review, we actually note that yes, they actually did make some disallowed claim. So in this case, the error may not qualify for VDP as walked through by Sue Lee earlier on when she is presenting part 1 and part 2 of the review. So do be careful when you answer these questions in the template to make sure it is reflective. So same thing, we highlighted over here at the template again, the number of samples to be selected for this review. So up to a maximum of 60. Then you fill in the information, invoice date, invoice number, name of supplier, GST registration, the description of expenses, the invoice amount. And you perform these following checks against the source document and you indicate yes or no accordingly. So for this template 6, you will have this part here to document your input tax claims on local purchases. If you don't have enough rows, please add in. You also document your input tax claims with imports if your company does import, or the ETRS, bad debt relief. If you don't have, you can just leave it blank. You only fill in if you have and you perform the checks. So if let's say it is a very straightforward, simple business, you may not have, maybe you have imports, but you may not have ETRS, you may not have bad debt relief, so you just leave it blank, it is okay. And this is the part where I also want to highlight the amount checked on the above samples are all, these are all auto-tabulated for you. So once you have entered all the amount and entered the first part of the template, all these will actually auto-populate for you. So we put this in so that you don't have to keep on manually counting whether did I meet the 30% or am I short of how many percent. So you will just select 30 and you fill up this template first. It works the same for the other templates as well. So you just select the 30, then you fill in the basic information, and then you can refer here to see whether have you met that 30%. If yes, then you just concentrate to check the source documents for that 30 samples that you have selected. If you don't see a 30% here, then you continue to select and you key in the basic information until you see either a 30% or you already hit a maximum of 60 samples. So you just need to key in the numbers here accordingly. Okay, so in step 1, you have already reviewed your GST returns filed for the past FY. Now in step 4, you are to review and compare your financial statements against your GST declarations for the same FY. The checks performed in step 4 provide another level of assurance that your GST declarations are complete and accurate. If any discrepancies are noted, you will need to explain and quantify the errors. So in this step, you compare your sales or turnover reported in your financial statement to the annual total supplies reported for GST to see if you have underreported your taxable supplies. Unless there's a reason for the difference, you will need to quantify any understatement. Generally, your GST filing cycle would coincide with your financial year. So if this is not the case, you should be using comparable figures when comparing your sales figure in the financial statement against your annual total supplies in the GST returns. You may refer to our ASK annual review guide for more details. So following the flow chart, what you see in your screen, to determine when you need to reconcile and explain for the difference noted between your sales and annual total supplies. In total, there are 3 checks that you will have to perform. Firstly, as indicated in the flow chart, you should compare your total supplies, that is the box for the 12-month period against your sales for the financial year. If the total supplies are more than your sales figure, no further action is needed. If the total supplies are less than your sales, you should compute the ratio of standard rated supplies over your total supplies and obtain a ratio. We use a threshold of 75% to determine if your business is predominantly making local supplies in Singapore. Therefore, if your computed ratio is equal to or more than 75%, you will need to reconcile and provide an explanation for the discrepancy if the total supplies in the GST return differs from your sales in the financial statements by more than 150,000. If the ratio of standard rated supplies over total supplies is less than 75%, you have to perform this reconciliation if the difference between your total supplies and sales figure is more than 500,000. The reason why we have set this threshold is because for a business that makes mainly local supplies, we should not expect its total figure to differ much from its sales figure in the financial statements. Therefore, if there is a large discrepancy of more than 150,000, we believe it is significant enough to warrant the businesses to investigate further and ensure that there is no omission of sales. However, for a business that does not make mainly local supplies, we have set a larger threshold of 500,000 as we recognize that the business may have other transactions such as out-of-scope supplies that may not be captured in their GST returns. The second check that you have to perform in step 4.2 of the ASK annual review is to ensure that you have included transactions with related parties and non-trade transaction. For example, sales of properties or fixed assets or sale made to related company in your GST declarations. So for example, as a guide, you may look for items such as amount due to or due from related companies or related parties in your financial statement for sales made to related company. Look out for fixed asset in your financial statement for any sales or disposal. 4.3 will need you to review for outstanding payments not made to your GST registered suppliers. So you need to review for purchases that you have not paid the supplier within 12 months from the due date for payment, and check whether you had accounted back the GST previously claimed on these purchases. If no, you will have to quantify the amount of input tax to be accounted back. So for the checks in step 4, you will record this in template 1, which was used when we record the findings for step 1. This is a screenshot that shows an extract of the template showing the part on comparison of turnover and supplies. Assume that the sales or turnover reported in ABC's financial statement is 1.4 million, 1437. Template 1 will auto-calculate the total supplies reported in the GST returns for the whole financial year and compute the difference between the sales and the declared total supplies. The template will also auto-compute the ratio of total standard rated supplies over total supplies for the year, as you can see on screen. So there is really no need for you to manually remember the formula and to compute the percentage, worrying whether you have done it correctly, so long as you don't change any formula inbuilt in the template. So as you can see in the case of ABC Private Limited, their sales are higher than their total supplies by 219,000. And their total standard rated supplies over total supplies ratio is above 75,000. Therefore, ABC needs to review the difference and check whether they have under-declared their supplies figure in the GST returns. In this case, ABC has found that the difference is due to their out-of-scope supplies of 200,000, which need not be reported in GST return, as well as an error for omitting to account output tax on the sale of a local on the local sales of scrap materials. Review your financial statements, including supporting schedules and notes to the account for the following transactions. Whether is there any sales made to related company, any interest income from loans to related company, any other income on the transactions with related parties, reverse charge, and check whether these transactions have been reported in your GST returns. If they are not, then you will have to quantify and account for the omitted transactions. So in ABC case, they have omitted to declare the sales of scrap material. Next is to review for any outstanding payments not made to suppliers. So now we have gone through the first 4 steps, step 1, 2, 3, 4 of the ASK annual review. We have come to the final step, which is to quantify any errors that you have discovered in the course of your review, and then to subsequently submit your findings to IRAS. For those who discover errors, please quantify the errors and correct your errors by submitting the declaration form and disclosure of errors template. If you have discovered GST error, which is recurring in nature, please review for the past 5 financial years and quantify the amounts as well. If you're unable to provide actual figures for the past years, please at least provide an estimate and let us know your estimated method for us to consider your working. After completing your ASK annual review, please correct your errors immediately by filing a GST F7 for the affected periods on a consolidated annual basis, or in your next GST F5 if it qualifies for administrative concession. Thereafter, please submit your findings for our review. Over the years, there are some common errors which auditors noted in the course of reviewing the ASK review submitted by taxpayers. Hence, IRAS has came up with these administrative concessions, making it easier for taxpayers embarking on the ASK journey. If the errors noted are found within the list, you may apply without the need to seek further approval. Unless otherwise stated, the administrative concessions will only apply to past errors, and businesses are required to take remedial actions to prevent recurrence of the errors. So if you are adopting the concessions, you are required to complete the declaration form on ASK administrative concessions and to submit it to IRAS together with your other completed templates. We would like to caveat that in the event if IRAS discovers that a business has wrongly applied or abused any of the concession, made a false or incorrect declaration, or failed to take remedial actions, enforcement actions may be taken against the business. The scenarios cited in the administrative concession are not exhaustive. So for scenarios that are not covered in the guide or other publications issued by IRAS, for example, the eTax guide, businesses are advised to write to us, providing full details of your errors. Okay, I will do a quick run through on ASK administrative concession. So basically, we have classified into different group A, B, C, D, E, F, G for different category. So same thing, you will have to fill in your information. Then you look for the error that you have discovered and see what is the administrative concession to be granted for that particular error. So for example, after going through your standard rated supplies, you record in template 2 and you realize that you have invoice error where you have issued invoices but did not meet regulation 11. So what is the administrative concession granted? You need not amend or replace the incomplete invoice. However, you must provide a revised invoice if it is requested by your customer. Because if your customer is GST registered, in order for them to claim the input tax that they are entitled to, they need to make sure that they have a valid tax invoice. So if your tax invoice is not meeting regulation 11, they may not be able to claim. They may come back to you and request for a revised invoice. So in this case, you must make sure that you're able to provide. So if you have adopted this concession, just indicate yes or no or not applicable. Under this column here, quantification of error, you will only need to provide quantification if it is provided for in the administrative concession. So maybe let's take a look at this. Okay, for example, you have noted this error. The value of output tax reported in the GST return differs from the GST amount shown on the invoices or credit note issued to customer due to rounding differences, different currency exchange rate, for example. So the concession says that you are required to quantify the error for the ASK accounting period. And then you are supposed to provide the quantification. So you will need to compute and indicate what is the error that you have quantified for this particular error that you have noted. So for this error, it also states that if your quantification shows an understatement of output tax, you are required to disclose this error and determine if the understated amount for the last 5 years, or to propose a method to determine the value understated if you don't have the actual value. It is then for auditors to consider whether your proposal can be accepted or not. Okay, let's continue with the errors, disclosure and declaration for ABC Private Limited. This table that you see on screen summarizes the errors discovered by ABC during their ASK annual review. For the errors discovered in step 1 and step 4, it is most likely a once-off error. Hence, they are not required to review this similar error for the past returns. However, for the error discovered in step 3, for invoice 12344, where they have wrongly zero rated their supplies, but the delivery was actually made to a local customer, this is likely a recurring error. So they will need to review and quantify the GST amount for the past periods. The first error discovered in ABC's review was omitting to account output tax for the sale of their commercial property. As this is a non-recurring error, they would record this under Section A of the declaration form. For the error discovered in step 3, which is the wrongly zero rating of supplies with insufficient export documents, we will see how this recurring error is to be captured in the disclosure form. Okay, as this is a recurring error, they can elect to quantify the error found in the audit period in Section A and the errors for the remaining period in Section B. So because the error is wrongly zero rated of supply, they should make adjustments to both their standard rated supplies and zero rated supplies. If the value declared in the GST return is understated, indicate the error amount as a positive value. So in the case of ABC, they should indicate 10,000 under standard rated supplies as a positive value. If the value declared in your GST return is overstated due to the error, then you will indicate the adjustment as a negative value. So in this case, for the adjustment to the zero rated supplies, it should be recorded as a negative 10,000. Since this is a recurring error in their past returns, they will need to review and quantify the GST amount for the same error for the returns filed so far in the current FY and for past years. For current FY and the last FY, ABC should quantify based on actual numbers. For periods before last FY, if they have difficulties quantifying, they may use a proxy to provide an estimated error for the purpose of this annual review. They will then need to submit this for our consideration and approval. So for the error discovered in step 4, which is the omission of local sales scrap of 18,000 and output tax, ABC would just need to fill in the description and the amount of error in the error notes of the error disclosure form. Here, ABC will need to report the sales value of scrap material and GST amount and indicate the description. Here you are seeing a pictorial view of how Section A of the error disclosure form should look like. And now we look at how Section B would look like. So you can see ABC actually reported the error for the past years. Okay, let me try to call out the disclosure of errors form. So same thing, you fill in the information. So you will see Section A and Section B. Section A, you will complete this section if the error affects only the accounting period under ASK annual return. Section B, you will complete this section if it is a recurring error and GST amount is involved. So you will have to record for the financial year that you have selected, that you are performing the annual review. So you are supposed to provide the actual quantification for the actual year and the previous year. For any past year, you may indicate there's actually a drop-down list for you to indicate whether you are providing the figure based on actual quantification or based on estimate. So how do we fill in this form? I will briefly go through. Okay, under standard rated supplies and output tax, same thing, the description, there's a drop-down list for you to choose what are the errors that you have noted based on this review. So if let's say there's a disposal of assets that I have omitted, it is a non-recurring, and what is the amount in which period. So you will see there's this error note here that states A1. So for error note A1, you are reporting, you are declaring the error of omission on disposal of assets. Then when you scroll down, there's this part that you need to fill in. For error A1, what is the error that I have noted? So the information that you are providing should cover these 5 points. And then you will have to explain what is the basis or method of estimation used. So depending on how many errors you have noted under which category, you just make a reference to the note number and explain at the bottom part. So for section A, you will see is A1 to A20. For section B, same thing is B1 to B20. Okay, so next I would want to share with you some of the common errors that we have seen through the auditing of ASK annual review. In template 1, we cover step 4.2 and 4.3, which tends to be left uncompleted by most of the taxpayers. So this is a reminder that all the yellow colored fields in template 1 are required to be filled in. So if there's a drop-down list, you just need to click on and select the relevant answer for each of the section. When you look through the different templates, please run through all the questions carefully. So I actually highlighted this when I was going through template 6 earlier on. We noticed that more often taxpayers who answered these questions, they actually tell us they did not claim, but upon review, we realized that they claim. So in this case, VDP do not apply to them.
Well, can I just check with you? You said that on review, it means that you could be picking transactions that is on top of what they have picked, and then you saw that there is actually errors.
Either that, or we may call for the listing for the particular returns that they have selected to perform this review. Then it is through us, when we run through the listing, then we actually noted that you have actually claimed. So some of the so-called explanations provided is, oh, I didn't know that, for example, I didn't know that medical insurance I cannot claim. So to them is, I didn't claim any disallowed input tax claim. But not knowing that this is actually part of the disallowed, falls under the part of disallowed category. So in scenarios like that. or they may have really, in very genuine case, they actually miss out this particular item. Okay, so some companies, when they perform the ASK annual review, they will immediately jump into completing the ASK declaration form without performing step 1 to step 4 of the review. So when they submit this declaration form to us, right, when we go through, we actually notice that this part of the declaration forms are actually left empty. So you remember just now when I went through template 3 and template 6, I actually highlighted the part where you fill in the number of samples selected and the percentage that is auto-populated by the Excel. That information is useful when you need to complete the declaration form. So you just need to extract the figures that you see in that relevant templates and put it inside here. Then you indicate whether you have noted any errors or not when you do the review. So it is very important that you need to go through template 1 to template 6 before you could provide us an answer in the declaration form. Okay, in the error disclosure template, we have actually provided some instructions on how to fill in the errors, how it should be quantified. So like I was explaining earlier on, if the value is understated, you want to add on the value because you have understated. So when you want to declare your error, it should be a positive value. But if the value you have declared in the GST return is overstated, like for example, you have overclaimed input tax, you want to reduce that amount, it should be a negative value.
Yvonne, I understand that this GST ASK has to be done when you apply for, let's say, MES scheme or on the renewal lah.
Yes.
So this MES scheme, like when we say renew is every 3 years, or is it like every year, then every year we have to do GST ASK?
But I think for MES, it's not every 3 years. If I'm not wrong, so it's not every year. It's like 5 years. So let's say you come in, you apply for the scheme, you do your first review, then we approve and we gave you this MES status, right? It should last for the next 5 years. So when you do the renewal, it will be at the 5th year if let's say the company wants to continue this scheme. Of course, at the renewal, they will have to do this and submit it to us for review again. Because in any case, it's like 5 years different. So we need to make sure that you have all the controls, you have all the documents are actually still in place lah. Okay.
Sorry, Yvonne.
Yeah. Yes.
So, but unlike ECAP, right? If we just do GST ASK, we could still be selected for audit, right?
Yes, definitely.
Okay, thank you.
Okay, this is the instructions that I was referring to in the error disclosure template. Okay, to recap, we have covered section 1 of the GST practices by Siew Lee earlier on that covers people, record keeping, systems, and internal controls. This helps the business to ensure they have the appropriate control in place to file a correct GST return. In section 2, we have covered the pre-filing checklist that helps to ensure the accuracy of the GST declaration before submitting to IRAS. So I think Siew Lee has also briefly run through the zero-rated supply checklist. In section 3 of the annual review, we cover the 5 steps that you need to perform to review for the past returns filed. Specifically, I have walked through the zero-rated supply checklist and the taxable purchase and the input tax claim checklist and how to fill in the respective templates. So this will therefore conclude the ASK annual review. This review has been designed as a guidance for GST registered businesses to conduct a self-review of their GST declarations. By doing so, they will be able to detect early any past GST returns and qualify for IRAS VTP program with a waiver of penalties. So with that, I have ended my presentation, but I think there's still some time. Maybe I can bring you through template 1 and the declaration form. Just give me a minute. Let me call out the template. Okay, you should be able to see template 1 on your screen. So I'm not going to go through the top part because it's the same for every template. You just need to fill in your information. Okay, this is the part where, if you could recall at the beginning of my presentation, I was actually saying that you will need to fill in the GST returns for the financial year that you have selected to conduct this review. So there are a few ways for you to do it. If you prefer to do the manual way, then you will have to, open up the GST F5 workings that you have done for that financial year and manually key in the figure, where you may run into the high risk of keying in the wrong figure transposition error. So we actually inbuilt these e-services in my tax portal for you to retrieve the GST F5 data for the period that you want to review. Once the system generates the data, you can just copy that whole section and you just do a paste at this portion of template 1 here. The figure will auto-populate. So for example, I just do so maybe it's a quarter return. Okay. So you will see that it will be auto-computed for you as well. What is the total taxable supplies for the year? And then, for example, if I put in my output tax, say for example, this is the output tax that is declared in my GST F5. Oh, okay, 2022. Say for example, I have declared 150,000 for the period ending March 2022 for my standard rated supplies. And I have only declared a $3,000 of output tax. So what do I see here? Yeah. Okay, I think there is something wrong with this Excel spreadsheet. We can't see that the figures are actually being auto-populated. Okay, if let's say this is downloaded from our website, and later on we will check back to make sure that there's no error. So if the Excel is working correctly, we should be able to see the computation checks that will be auto-populated at this portion here. And then when you need to check the declared output tax, are there? You see? This is what I have declared in my GST return. But the computer output tax by right, it should be 10,500 because that is like 7% of my standard rated supplies. So the Excel spreadsheet now is telling me I have underaccounted my output tax by 7,500 in this quarter. But because it says that the threshold, if it is anything less than negative 10,000 by right, I do not need to explain anything here. But as a good practice, you can always, if it is not too much of finding at your end, You can always put in your explanation at this portion here, findings and explanation. So you can actually keep this as a record. When you perform the next review, you will actually know that, is it a common error that happened. Okay, let me try to put in a purchase amount. Okay, so for the part on declared input tax and computed input tax, I should see a 0 because I have claimed correctly. My declared input tax 5,006 is what is equivalent to the computed input tax. So it doesn't warrant me to do any investigation. And then the TPTS ratio, so it's nothing more than 1.2. So same thing, I also do not need to put in any explanation over here. Okay, then this is the part, just now we say that there's an orange cell, if you can recall, to let us know which is the return that I have to select. So if you scroll slightly to the right, you will see this orange cell. The maximum value is 230,000. You just do a match back. Okay, this is the one that I should be selecting for my review. It is easy for you to see if you're on a quarterly filing return basis because there's only 4 figures. But for companies who are on a monthly filing return cycle, then they will have to look at 12 figures. That's why we actually put in this orange cell. So you just need to look at this, find the matching numbers, and that will be the return that you need to select for the annual review. And this is the part that we have emphasized more than enough. Step 4, where it is no, not this one, step 4.2. Okay, where we usually notice that taxpayers who perform the annual review would actually tend to miss this part out. Okay, so 4.2 is to review for transactions with related parties and non-trade transactions. So whether do you have all this? If yes, please let us know what is the amount omitted. So 4.3 is for outstanding payments not made to your supplier, but you have claimed input tax earlier. And then step 4 is actually to the part where you need to compare your turnover in your financial statements versus your total supplies that you have declared in your GST return. So same thing, it is auto-populated. You just need to fill in your annual. Say, for example, I have declared 1 million. And then there's a difference of 300,000. And the ratio is actually 100. So at every section of the template, we will actually tell you what to review, what not need to review. So over here, we already, it is stated here, you will only need to review and check whether your total supplies is understated if your scenario falls under A and B. Then you will enter your reason for the difference at this portion here, which is free flow. Okay, let me go on to the declaration form. Okay. So this is the declaration form to declare that you have performed this review and whether there's any error that you want to declare to us. So same thing, you fill in the particulars, your business activity, did you make any out of scope supply, so on and so forth. Then provide us the contact person and the details of your review, whether you are doing this for the purpose of application for applying of scheme or renewal of scheme or purely for VDP program. And then let us know who conduct the review for you. Okay, this is also the part that maybe I take this chance to highlight. B1 and B2. B1 is to tell us which financial year is being selected for the review. And B2 is to zoom in to the accounting period that you have selected to perform the review. Many a times when we receive these, we notice that this period here is from Jan to December of a particular year. The accounting period, the taxpayer will also fill in Jan to December, which is not correct lah. So for the accounting period, it should be for that 3 months that you have selected, or at least that 1 quarter that you have selected for the review. And this is the part that I was explaining earlier on. Okay, on the number of samples that you have selected, what is the percentage of the total listing value? So a lot of time when we receive, especially under the VDP program, I mean, they do this review for the purpose of VDP. We notice that they will actually leave this part blank. Okay, then it will lead us to think whether have they actually done this review correctly. So if it is not done correctly, then we are not able to accept what they have provided us or they have submitted to us. Then we will have to ask them to redo it. So please remember that you have to complete at least template 1 to template 6 before you can have all this information to fill in and let us know what is the numbers that we are looking at. And then whether did you adopt any of the ASK administrative concession, yes or no? And what is the amount of quantification? Whether after your error quantification, is it to be a refund amount or a payable amount? After that, you sign off the declaration form. So together with the disclosure of error template, this declaration form plus the working template to show, if let's say the working template show any error, you can then submit to us for review. If the auditor requires any further information or further, or maybe like, for example, request for the listing for further review, then we will contact you. So this contact person, please provide us with the proper contact person, because sometimes we also notice that when taxpayers submit this to us, right, they will just indicate a name. But when we call, then they will tell us, oh, it's just purely really a contact point. So please call back who and who. That will actually help. That will actually delay our process of review. Okay, so with that, I think I am done more or less. So thank you. Let me look at any more questions that you all would.
I'm just wondering, so if I found some errors, and then it means that my longer period adjustment also need to readjust, then I need to declare the error, on the longer period adjustment, is it?
When you talk about longer period adjustment, you're referring to
like input tax claim, right? So we need to do the longer period adjustment. So if all there are errors found, then the figures will be different. So I think that will impact the longer period adjustment, right?
Okay, that means you are doing. That means your input tax claim that previously you have claimed is actually not full claim, right?
Yeah.
So that will affect your longer period adjustment, yes.
Then we need to. I'm just wondering where should we reflect that in the templates, lah?
I think in the templates, we did not cover the longer period adjustment. But if you think that this error would actually impact what you have reviewed and adjusted, then you may have to go back and review it again. Because in this review, right, it actually cover for 5 years. So I'm sure your longer period adjustment is actually shorter than that 5 years.
Every year we have to do a longer period adjustment, right?
But because this review, if let's say you notice this error and the most you go up to is 5 years.
Okay.
So if let's say this error is affecting your longer period adjustment, it will also be up to that 5 years. So, okay, wait, let me check the,
Okay, maybe Yvonne, I try to handle this question.
Can,
So
thank you,
Lei
Xiu
Ping,
Li.
yes, okay, so you were mentioning that there were some errors. Okay, so it can be any errors lah, because due to the longer period adjustments, so we can be talking about standard rated supplies or even input tax itself. So if the error ultimately impacts the amount of input tax that you should adjust due to longer period adjustments, right? I think you could actually indicate it as part of the input tax. You know, there is this section in the templates where you mentioned where you will have to actually disclose the error due to input tax. So you can separately disclose it, you know, because of the error, which you can describe, and then you put in the affected input tax that affected input tax that's due to the change in the formula or the longer period adjustments.
Okay, so
Lei Ping, can you understand?
Yes.
Yeah.
Yeah. So it's like just stating somewhere in the
Yes, that would be the because
template lah.
because longer period adjustments is only affecting the input tax amount, correct?
Yeah.
So you can actually indicate it as part of the input tax errors in the template itself.
I think I share something on
Sure,
screen.
sure. Go ahead, Yvonne.
Yeah, you can continue to talk what I share lah, so they can actually see.
Yeah, so it will be under, yes, it will be under
Mm.
this taxable purchase input tax section that you can actually complete. It's just that, you know, we will also ask for the like errors, then you can actually describe over, you know, due to the error note number what, it will actually affect the longer period adjustment, and such that my adjustments input tax will be higher or lower due to the adjustments in the longer period adjustment.
Okay.
Yeah,
And then if let's say I have such error that impact 5 years, I have to do adjustment for longer period of 5 years.
Yes. Because
Okay.
I think longer period adjustments we cannot give you know, as much as we want to, like, you know, help you all save time and effort, but I think a bit hard lah, because a longer period adjustments really matters. Yeah.
Okay.
So it will really have to be 5 years, which we are asking for the quantifications of the errors.
Okay, thanks.
Okay, welcome.
I think maybe for companies that first embark on ASK for VTP purposes, it would be painful for the very first time they embark, because of the if in the event they discover any recurring errors. But it would be good if after this first attempt, the business can actually consider to perform this ASK review on if your manpower allows, on a yearly basis, if not at least once every 2 to 3 years. So if let's say you really meet with any recurring, then it is less painful. You don't have to go all the way back to 5 years. It will just be that 2-3 years review that you need to do.
Okay.
And it is not necessary that, you know, I can only embark on this ASK if only when I want to apply for a certain scheme, or only when I need to do any reviewer. There is this arrangement in one of the arrangement, I think it's arrangement 1, it can be actually your internal accounting manpower. If you can spare that 1 or 2 manpower, you can actually consider to do this review on a yearly basis. So if there is really any error, it will just be reviewed for that one particular financial year.
Okay, thank you.
Yeah, and then of course, to your benefit lah, if really there's any recurring, or if really there's any error, the amount of tax that you need to pay up is actually lesser than, you know, if you one shot do a 5 years thing.
Okay, but I mean, just curious lah. I think most of the companies, right, who need to do GST ASK, right, from your experience, most of them just hire a professional CPA firm to do it, right? Seldom there are companies that get an in-house staff to do it themselves, right?
We would still have lah, because you want to engage a third party to do, right? It also depends on budget.
Okay.
We don't know how much the tax agent are actually charging in the market, but it's definitely a sum of money that if you think you have the budget to cater for it, then yeah, why not? But if not, then we also have cases that comes, that submit to us, which are actually purely performed on their own. But of course, if it is for scheme application and renewal, then you will have to follow the proper procedure that you need somebody to sign off the report.
Yeah, and it must be a
ATA or
accredited person
ATP.
lah.
Yes,
Oh,
yes,
okay.
yes. But
Yeah,
if it is purely
Mm.
for your own review, then you can actually do it in-house, or you can actually choose to outsource.
Then I remember that there is this practice, good practice lah, essential practice lah for people, right? Then it's mentioned that the preparer and approver, right, must have 1 year experience lah. And I'm just thinking that it may not, though it's essential, but the company may have limited resources and may not be such there may not be such a preparer or approver lah who has got 1 year experience to do the return lah. Then in the case, if they are like, they need to apply for GST ASK because they need to apply for the MES scheme, and they actually, the approver and also the preparer actually either or both of them don't have the 1 year experience, and then they declare accordingly, say no, right? Would you then say that, oh, they fail GST ASK and I cannot give you MES scheme?
But if it is a scheme application, it will definitely have to go through an outsourced party, which is already a certified ATA or ATP.
No, I mean the people, right? There is a requirement essential practice, right? That the
okay. The section 1, part 1, section 1.
Yeah. So I'm just thinking, if the company is a very small company and they have a preparer and also the reviewer, and both of them don't have actually that 1 year experience. So when they want to get the MES scheme, they get a Big Four to come in and help them. And then they declare accordingly that, okay, for this ASK scheme, they declare accordingly that GST return has always been filed, and both the preparer and the reviewer don't have the 1 year experience, and actually they failed the essential criteria. So does it mean that they failed GST ASK and they cannot get MES scheme?
Surely, are you aware of this part?
Actually, I think the section 1, I'm not sure whether is it a compulsory 100%. Of course, that's what we say lah. But I think it also means that, the questions I don't think we were like die just hop on because that question is reply as a no, that we don't accredit the company with the MES lah. I think that one we are like a bit too much if we actually do that. But I think it's more so like it's some kind of assurance. Like, so even though let's say the preparer and the approver are both not experienced enough, like in terms of meeting the minimum 1 year experience, then whether is it, whether there are other controls or process,
this part,
correct, where they can assure that no doubt we are all new, but we actually attended, I'm not sure, like our website, the GST courses that we actually have in our website, conducted by IRAS and all, that will somehow assure that it shouldn't be too much a big issue lah. I don't think that question will just kill off everything. I don't think so.
Okay. It's good to hear that. Okay, thanks.
Okay. Welcome.
Okay, I think today there's quite a few questions on ACAP and ASK. We are trying to do a comparison between these two compliance review initiatives that IRAS has. So basically, for ACAP, is actually a more higher level review where we actually go into the internal controls set up by the businesses that talks about the corporate governance. So it's definitely much more tedious when, if you compare these two initiatives. And which is why for ACAP review, after the auditor actually done the review, we are able to accord a certain status to the businesses. And because of this status that we accord, it will actually mean that this business, like for example, will not get any audit in the next 3 to 5 years. They will get their refund faster. Probably there won't be any checks. All these are actually because of the sound internal controls that they have proven to us during the ACAP review. But for ASK is more on reviewing on that particular financial year that we are reviewing, and whether has the GST returns for the return that the GST return for the quarter that has been selected or for the financial year has been reported correctly. It is not so as much in depth as what ACAP is required. So I see there's a question that is asking on company is currently on ACAP. Is it still necessary to do ASK annual review? Definitely, you do not need to do it for IRAS audit purposes or for any scheme reviewer, because I believe when the ACAP when we accord you the status under ACAP, it would have included the renewal of any schemes that the company is in. But I would think personally, I would think it would be a good practice for you to do it internally to make sure that everything is sound lah. Yeah, but definitely you won't be required or asked to perform this ASK renewal ASK annual review thing until probably the ACAP status has expired and you didn't apply for any renewal for ACAP. Then probably you may want to consider doing the ASK annual review to see, whether you want to embark on the VDP or anything.
I just want to clarify. I understand that if it's for a GST ASK renewal, because I need the MES scheme, the review can be conducted in-house if there is a staff with the GST accreditation. But if let's say it's the first time I want to apply for MES scheme and I need to do the ASK, right? For the first time, right? Then for that, right, is it that I must get the professional firm to do the review? Or is it like, even in-house review, so long as there's a staff with the accreditation also can?
Okay, so you are referring to the very first application, right?
Yeah, correct.
Okay. So I think so long as you meet either one of the three arrangements. Okay, wait, let me check. Okay, it is stated in our ASK guide that for the purpose of applying for or renewing GST schemes, Arrangement 2 or Arrangement 3 has to be adopted. That means you cannot go under Arrangement 1 and tell us that I want to apply for MES. Because Arrangement 1 is, I think, purely for your self-review purposes that you actually conduct on your own. Arrangement 2 is you conduct this review by an in-house or external accredited ATA or ATP. And then Arrangement 3 is a combination of 1 and 2. That means you own self-review, then you get in a certified ATA or ATP to sign off the report. So if it is purely for applying or renewal, it has to be either Arrangement 2 or 3. That means the external ATA or ATP definitely has to come in.
Sorry. So for Arrangement 2, right, I thought it means that if, let's say, the company has a staff who have the GST accreditation, right, then the review is done in-house and you don't need any more certification or help from the Big Four. Is it like that?
Yep.
Okay, so that means even if
because it is stated in the guide that for Arrangement 2, the review is conducted by in-house or external ATP or ATP, ATA or ATP.
Okay. So even for first time possible so long as the staff is accredited
Because in instances where the review or certification is outsourced, right, ultimately it's the business that is still responsible for the completeness and accuracy of the declaration. So you get in the person to double check what you have done. Ultimately, the business will still be responsible for whatever that they have signed off.
Okay, thanks.
Okay, hello. We have this question. from Monica. So she's asking whether there's a vendor error or refusal to provide tax invoice and whether they can still claim input tax. So I think the basic requirement of having a input tax, okay, so the condition of claiming input tax, and one of it is that there must be proper and valid supporting documents provided lah. So we definitely need an input tax. We definitely need an input tax, especially if the purchase amount is actually more than $1,000. So rightfully, you can't claim the input tax. So as to what you can do is you can actually just let IRAS know, and then we will probably follow up with the vendor, relating to this lah, because rightfully all GST registered businesses is required to issue valid tax invoices to their customers. I hope that understands the question, answers the question.
Okay, do we have any more questions coming in?
Sorry, I just want to check. This GST ASK webinar, is it like an annual thing? Like, I mean, like you can sign up for it because actually IRAS organize on an annual basis kind of thing.
Okay, this webinar, right? It is held twice every year.
Oh, okay.
Mm.
Okay, thanks.
Okay, do we have any more questions? Oh, did I miss out? Okay, wait. Okay, there's this question. If GST percent is not stated in tax invoice, cannot claim input tax, especially when GST rate increase from 8 to 9%, vendors supposed to split the different tax rate. Okay, I think we have stressed whether in our reply or verbal reply that in order for you to claim the input tax, right? I think one basic requirement is you must have the supporting valid tax invoice to support the claim. So if let's say when you receive this invoice, you go through and you realize that it actually didn't comply to regulation 11. So as a customer, you are not able to claim based on this, which we call it an invalid tax invoice. So you will have to go back to the vendor, which by right the vendor should have been educated by these GST rules that, when they provide their customer with the invoice, it has to be a valid tax invoice showing very clearly what is the GST amount that they have charged out to you. So do we have any more questions from the participants? Probably we will hold the session for another 5 minutes. Okay, the question, if vendor replied system restriction, unable to split, what should we do? I think my answer will be similar to what Siu Li has actually answered earlier on to the earlier question. First thing, you will have to go back to the vendor and ask for to ask for a revised invoice to clearly split out or to clearly state what is the GST amount that they are charging out to you. If you face any difficulty, please let us know. We will try to do a follow up with the with the supplier.
Hello, can you hear me? Hi, let me introduce myself. I'm Alex, one of the staff helping to organize this. Maybe I want to add on to this system restriction. They give different reasons they cannot do this, their system cannot do that. Okay, so let us get the principle straight first. So all GST registered businesses are required to issue valid tax invoice. This is the motherhood statement. So there's no running away from that. Okay. I mean, we have to agree, right? Your GST registered, you have to comply with whatever things that are all the relevant laws and regulations. So with that in mind, now we have this situation. The vendor says that, oh, my system cannot do that. I haven't updated the system. What should we do? You follow the motherhood statement. The supplier is supposed to issue the correct invoice no matter how. So when we see this in your rate change webinars, we do encounter this, or I haven't update my system in time, what should we do? The simple answer would be that you issue paper invoice. Yeah, if your system cannot generate, then you have to do it manually. Yeah, same thing for records. If your system cannot keep the records automatically, then you use a manual Excel spreadsheet to manually keep track of the 8%, 9% different GST rate. Yeah, so there's really there's really no chance that the vendor can escape the liability, as in their responsibility of a GST registered business. So they have to issue the paper invoice to you. Okay, thanks. Okay, I'll answer these two. There's another new questions. Okay, maybe, okay, there's a new question saying that what if the receipts doesn't have the 8% mentioned? Okay, maybe let's try a different way. Rather than asking different questions, let's do a more conceptual way. What if we all know that the motherhood statement you must have the proper tax invoice. Okay, so there may be question about what if I don't have this, what if I don't have that, what if the punctuation mark I don't have a dot sign, what if the name instead of ABC Private Limited is addressed to ABCP/L, this kind of thing. So just now we also mentioned something that, okay, we are not really that strict in the sense that if section 1 you mentioned that your staff don't have the experience, that means it's a straightaway struck through, you don't meet all the conditions, everything fail. I think that's a very high-handed way. Okay, we say that you must have a proper tax invoice, then you in order to make your claim. So what happens if you make an error? Of course, IRAS will make a judgment call. We will assess how serious is the error. We will assess, is there any way that we can get more evidence? But of course, I'm not able to share how we conduct our audit. Okay, but do rest assured that when we conduct audit, we will exercise judgment. It's not that there's one punctuation mark or one comma or one punctuation mark that is wrong, then everything is wrong. Yeah, but on the other hand, if the amount is totally wrong, then of course there's a more severe error. Then yeah, so we make a judgment whether or not the error is a minor one or the error is a very severe one, and what other means that we can do. So it really depends from case to case from case. So I'm not really to really answer much, but just bear in mind that if you have information, just bear in mind that try to keep proper records so that in the event that there's error, we reach out to you, you will be able to provide whatever information that's available. Then, of course, we will assess all the evidence as a whole. Then before we tell you that, what's our final decision is. Yeah. I hope that will answer like all these little questions, like what if the error, something is wrong. Yeah. Any other questions? Okay, so if not, then we can probably close off the sessions. So we will hand over the time to you, Jocelyn.
All right. Okay. Thank you, Yvonne, Siu-Li, and Alex for your time. Okay. We have reached the end of today's session. Okay. So before everyone leave, help us complete an evaluation form, which I will trigger right now. Give me a moment. Okay. Help us complete this evaluation. And after you are done, you can leave the meeting. Thank you, everyone. Have a good evening. Bye-bye.